Welcome back, everybody, to our deep dive into Aarti Industries and their second quarter results for fiscal year 2025. We're going to be using their financials, of course, and a recent analyst presentation to really dig in, see what we can find out about where Aarti Industries is heading.
Yeah, and I think it's really interesting to see how they're adapting their strategy, you know, especially with this kind of shift away from agrochemicals and more towards things like their energy applications and their long-term contracts. So yeah, the financials, I think, will give us a pretty good view into how these moves are actually playing out.
All right, well, let's start with the headline numbers then. So Artie's revenue for Q2 of fiscal year 2025 reached 1,786 crore. That's a 12% year-on-year increase, so that sounds pretty impressive, right? But then you look at the profit after tax, and it's actually down. It's down a pretty staggering 42.2% from the same quarter last year.
Yeah, that's definitely a contrast that we need to unravel, right? You've got revenue growth, but this dip in PAN-T. And it's not as simple as it looks at first glance. Because actually, if you look at the first half of fiscal year 2025 overall, there's a 19.9% jump in revenue and an 18.1% increase in PAN-T. So it seems like Q2 is really the anomaly here.
Yeah, it's almost like you're seeing a plant grow taller, but then it has fewer flowers than expected. We need to figure out what's going on beneath the surface here.
Exactly. And I think, one of the keys to that is this kind of evolving mix of revenue streams. So over the past 3 years, RT has very strategically moved away from agrochemicals and fertilizers,
Oh, okay.
which, those sectors have faced some headwinds,
Yeah.
things like inventory corrections, subdued demand.
Makes sense. So instead, they're kind of going all in on the energy applications, especially MMA. And correct me if I'm wrong, but isn't MMA kind of like a key ingredient in things like acrylic plastics and coatings?
Yeah, that's right.
And then also, they're growing that long-term contract business, right? That's got to help give them some more predictable income.
For sure. But, this move into energy, it's definitely a calculated gamble. On the one hand, it offers a ton of growth potential, but it also exposes them to a lot more volatility. With global energy markets. And we really saw that play out this quarter in Q2 when refining margins, specifically the gasoline-naphtha spread, really took a hit. And that directly impacted their energy business. I think volumes were down 36% quarter on quarter.
Wow. So it's a high-stakes game. Betting on energy can win big, but the losses can be just as dramatic.
Absolutely. And, that ties directly into these shrinking EBITDA margins that we see in Q2. So even though non-energy products saw a pretty big year-on-year increase in volume, like 22%, it's clear that margins are getting squeezed across a lot of different product lines.
Yeah, and in the presentation, they mentioned pricing pressure as a culprit. It's almost like they're trying to sell more lemonade, but everyone else on the block is suddenly having a price war.
Right. Yeah, and that pricing pressure could be a sign of increased competition, maybe new players entering the market, or it could even signal that certain products are becoming commoditized, where buyers just have more options and can demand lower prices. I think figuring out the root cause of that pressure is going to be key to evaluating the long-term impact, on their profitability.
So it seems like strong demand for their non-energy products is a good sign. But they might be facing this dilemma where, do they maintain margins and risk losing market share? Or do they compete on price and potentially hurt their profitability?
It's a tough balancing act. A lot of businesses face that. And, it kind of makes those long-term contracts that they have, like contract 3, look even more attractive.
Yeah.
Because these contracts were their guaranteed EBITDA, regardless of volume fluctuations, offer some stability amidst, all of this pricing turmoil.
It's like having a loyal customer who says, hey, I'll pay you a set price for your lemonade, rain or shine.
Right.
Yeah, it's a nice safety net, especially when everyone else is slashing prices.
But, it's interesting because even those contracts aren't like a perfect solution. The presentation mentioned Contract 1, which is a 10-year deal for agrochemical intermediates. It was actually canceled back in 2020.
Oh, wow.
So it's a good reminder that even long-term agreements, they can fall through sometimes.
Yeah.
Things happen, and they can disrupt even the best-laid plans.
It seems like Ardo received some compensation at least. But yeah, it just shows how risky it can be to rely too heavily on any single contract.
Yeah, definitely diversification is key, not just with their products and where they're selling them geographically, but also the structure of their contracts and how long they last.
Yeah, like making sure you have multiple lemonade stands spread across different neighborhoods.
Right, exactly.
With each one having its own unique blend and its own loyal customers.
Now let's turn to some of Artie's expansion plans. They are making some significant investments in new capacity, particularly for MMA, NCB, and ethylation products. And, I think this signals a lot of confidence in the long-term growth of those markets. But of course, it's not without its risks.
Yeah, it's like building a bigger, better lemonade factory, but you're kind of betting that people are going to keep wanting more lemonade.
Exactly. They're aiming to capture a larger market share, especially in agrochemicals. And they're diversifying their customer base for MMA geographically. So they're looking at places like the US, Europe, and Singapore.
That geographic expansion is smart, though, right? It's like setting up lemonade stands in different countries and coming up with different flavors that are tailored to those local preferences.
Yeah, it is smart. But navigating all the different regulations in each place and all the cultural nuances, it's not going to be easy. And it looks like their strategy is to build up their technical sales expertise, work with market experts in each area, and partner with local distributors.
So it's kind of like hiring local lemonade experts who know exactly what ingredients to use, how sweet to make it, what kind of marketing is going to work best in that area.
Exactly. Yeah. And let's not forget about the financial side of all this expansion. If you look at Aarti's standalone financial statements, their finance costs for Q2 were pretty significant at 62 crore.
Yeah, those finance costs are like the rent you pay for your lemonade factory. That can definitely eat into your profits, especially if interest rates go up.
Right.
But it looks like their debt-to-equity ratio is at 0.65. So I guess that suggests they're managing their debt pretty responsibly.
Yeah, they're not over-leveraged, which is good. The cash flow statement shows they've been raising quite a bit of money through borrowing, but they've also been paying back a lot of their existing obligations.
So it's like taking out a loan to upgrade your lemonade factory, but you're making sure to pay it back on time, and you're keeping your overall debt at a manageable level.
Right, and on top of all this investing they're doing, they're also focusing on ways to optimize their costs. The presentation highlighted a bunch of initiatives they've put in place.
So cost optimization, that's like figuring out how to squeeze more lemonade out of each lemon. What are some of the tactics they're using?
Well, it could involve streamlining their supply chain, negotiating better deals with their suppliers, maybe implementing energy-efficient technologies in their manufacturing processes. They might even be finding creative ways to reduce waste or repurpose byproducts.
So using every part of the lemon, the peel, the seeds, everything,
Exactly.
to make new product or reduce waste, really maximize their efficiency and be resourceful.
It's super important, especially when margins are getting squeezed like this.
Yeah.
Speaking of squeezing, let's talk about another really fascinating part of their strategy. They're moving to these new chemistries and asset-light models.
Okay, so they're not content with just making lemonade. They're exploring new beverages.
Exactly. They're looking at strategic alliances, making early bets on some of these up-and-coming sectors, like electronic chemicals and battery materials.
So experimenting with new fruit combinations, maybe developing some sugar-free options, or even a whole new line of energy drinks.
Exactly. They're trying to anticipate those future trends. Yeah. And be a leader in those markets.
Smart.
And, this willingness to look beyond their core business, it's a good sign. It shows that they're adapting, and that's something investors really like to see.
Yeah, it shows they're not afraid to try new things and change with the times. And while they're exploring all these new things, they're not neglecting their commitment to sustainability. It's not just a buzzword for them. It's really woven into their entire operations.
Yeah, you can see that in their investments in renewable energy. Things like zero liquid discharge plants, and waste energy utilization.
So like using solar panels to power your lemonade factory, having a system where you're not wasting any water, and using the heat from production to power other parts of the operation.
Exactly. And these initiatives not only reduce their impact on the environment, but they can also have a really positive impact on their bottom line. They lower costs, they make their operations more efficient, and they appeal to investors who really prioritize ESG factors.
So it's a win-win. They're doing good for the planet, and they're making their business more sustainable and appealing to a wider range of investors.
Exactly. And their sustainability goes beyond just environmental concerns. They're investing in social initiatives as well, supporting local communities, promoting employee well-being.
So it's like sourcing your lemons from local farmers, offering good wages and benefits to your employees, giving back to the community by sponsoring events or supporting local charities.
And this approach to sustainability really shows that they're committed to making a positive impact. That's not just about profits.
It's about building a business that's good for the planet. Good for their community and good for their employees.
Exactly. And that's a recipe for long-term success.
So they're really playing the long game here, building a business that's not just about profits, but about sustainable growth, creating value for years to come.
Yeah, I think you can really see that long-term perspective in how they approach research and development. They're not just trying to improve what they're already doing, they're investing in real innovation, pushing the boundaries in the specialty chemical sector.
So their commitment to R&D is like constantly coming up with new flavors and ingredients,
Right.
trying to discover that next big hit beverage.
And they have these incredible labs. Top-tier talent, they're collaborating with universities and research institutions. It shows how dedicated they are to innovation.
And it seems to be paying off. They're developing new chemistries, optimizing their existing processes, coming up with creative solutions for all sorts of industries, even getting into those cutting-edge fields, like you mentioned earlier, the electronic chemicals and battery materials.
Yeah, it's really forward-thinking. It shows they can anticipate what the market's going to need. They're not just keeping up with the change, they're driving it.
So they're not just making beverages, they're inventing whole new categories of drinks before anyone even knows they want them.
And you see that same innovative spirit in their partnerships and collaborations. They're not trying to do everything themselves. They're teaming up with leaders in different fields to leverage their strengths and grow faster.
It's like finding the best citrus growers, the most creative packaging designers, the most efficient delivery system to build something that's much bigger than they could on their own.
It gives them access to new markets, new technologies, different perspectives.
It's like a global network of beverage enthusiasts, all sharing their expertise and passion to see what they can achieve together.
But even with the most innovative products and the best strategies, artists still has to deal with a lot of complexity and uncertainty. The presentation actually mentioned a few key risks that they're trying to manage.
It's like they're navigating this marketplace where consumer preferences are always changing, new competition is popping up, and unexpected things can happen, like supply chain problems or changes in regulations.
Right, things like fluctuations in raw material prices, geopolitical uncertainty, shifts in global demand. Those are all challenges for them.
Like unpredictable weather that affects your citrus crops, political instability in a country where you get your ingredients, or consumer tastes changing so your once popular beverage isn't selling anymore.
And it looks like Aarti's using a few different strategies to manage these risks. They're diversifying their supply chains, expanding into new markets, and continuing to invest in R&D to stay ahead of the curve.
So getting citrus from multiple places in case one crop fails, offering lots of different products to keep up with changing tastes, and always innovating so they have something new and exciting to offer.
And of course, we can't forget about the people involved. Aarti has over 6,000 employees, and they're the backbone of the whole operation.
Absolutely.
Their dedication and expertise are crucial for driving innovation, maintaining quality, and building those relationships with customers.
So it's like having all these talented people working together. From the farmers who grow the citrus, to the scientists developing new flavors, to the drivers who deliver the beverages.
Right, everyone plays a part.
Yeah, and artists seems to really understand that. They invest a lot in their employees, providing training and development opportunities, creating a culture of collaboration, and building a workplace that values diversity and inclusion.
They want their employees to feel valued and respected, like they can really contribute.
And it's not just about good salaries and benefits. They have programs for health and wellness. They promote work-life balance, and they show appreciation for their employees.
It's a great approach.
Yeah.
You know, where people feel supported, both at work and in their personal lives.
Where their hard work is recognized.
And their well-being is a priority.
Exactly.
It's something that really sets Aarti apart. They know that having happy and engaged employees is key to building a successful and sustainable business.
And you can see it reflected in their track record, their commitment to innovation, and how they're trying to make a positive impact on the world.
Aarti's story shows what can happen when you combine long-term vision with smart execution and a real commitment to sustainability and social responsibility.
It's a reminder that success isn't just about the bottom line. It's about building a business that benefits everyone, your employees, your customers, the community, and the environment.
It's about leaving things better than you found them.
So as we wrap up this deep dive into Aarti Industries, we hope you'll take these insights with you. Think about how they might apply to your own work, your investments, or even just your approach to life.
Aarti's journey is inspiring. It shows that innovation, resilience, and doing good can lead to amazing results.
Keep those principles in mind, and you never know, maybe you'll create something extraordinary yourself.
It's been great exploring Aarti's world with you. Until next time, stay curious and keep learning.
Happy diving, everyone.